What exactly should you be watching out for in the markets as an investor? Karthik Kumar of Axis Mutual Fund is joining us to talk more about the year gone by and also on his approach to the market. Karthik, afternoon. Thank you so much for your time. You know, investors who stayed put have been richly rewarded in 2023. By the looks of it, the way macros are setting up, earnings outlook, etc., how does the setup for 2024 appear? Are the risks on valuations getting pronounced, or do you think earnings will catch up in due course this quarter and next as well to cushion the market?
Firstly, thanks for having me on the show. I think as you rightly pointed out, we've had another stellar year, not just on an absolute basis, but even if you were to look at our performance vis-a-vis our emerging market peers and China in particular. Just to put it in perspective, this is our third year of outperformance to MSCI China, and the cumulative outperformance is almost 70% in US dollar terms. Switching focus to 2024, I think the three main things that will remain critical is global growth, inflation, and monetary policy. Our house view is that we expect global growth to soften, primarily led by the US. Europe has already seen slightly negative growth, and we expect UK to see recession sometime over this year as well, which would mean there would be downward pressure on inflation, as a result of which central banks and policies can be a bit more dovish, and that can prove to be a tailwind for markets. An environment like that typically is very conducive for money flow into emerging markets. And given that our weight in emerging markets has only increased over time, that should help passive flows in addition to active flows that are looking to deploy money into our markets. That's the global setup to start with. Talking about more domestic points, I think election will remain the focus over the next 6 months, 5 to 6 months. Having said that, I expect the markets to consolidate over the first quarter for two reasons. We've had a good rally into the year end. Second, typically first calendar quarter of the year tends to be the most subdued calendar quarter. Just looking at past historic records over the last 10-12 years, that's been the most subdued calendar quarter. So I expect some kind of consolidation over the first quarter of next year. But having said that, as you rightly pointed out, we are trading at a valuation of around 20 times forward price to earnings. And also globally, we are trading at a premium. But given our growth differential, both at a GDP level or at a market level, I expect those multiples to remain, barring an external large disruption.
Karthik, I was just having a look at the two funds that you manage actively, the quant fund and the arbitrage fund. What caught my attention is that you have a very reasonable position in your quant fund as far as a specialty chemical company is concerned. One of the leaders, I would say, among the top three. What I want to understand from you is that the narrative up till now was that there was a lot of pressure on chemical prices because of China dumping, and then destocking by some of the big players, and the sector has been underperforming for 2-3 years now. I want to understand, do you think the long winter for specialty chemicals may be getting over? We may be in the peak of pessimism right now, or you would say things are not clear yet? This one, of course, has a pharma angle to it as well, but I want to understand from chemical and specialty chemical, your thoughts.
Okay. As you rightly pointed out, it's a mix of certain other business exposures as well. But largely talking about that space, the space in general, I think, might still continue to consolidate for some time. Having said that, there will always be stock level opportunities that one will have to see and evaluate. But I think the space will continue to consolidate for some time for all the reasons that you mentioned.
What are your thoughts on some of the banking names? Though the return ratios of large private sector banks appear to be pretty good, they are doing well. Returns have also followed. PSU banks have lagged so far. So do you think there is a case to look at large PSU banks, or you would want to stick to your large private sector bank kind of overweight?
So right now, when I look at it from, as you rightly pointed out, it's a quantitative model that I follow for my investment process. And within that process, I have a good, while, as you pointed out, in the top 5 or top 6 position, you do see a private bank, but essentially the portfolio has good exposure to PSU banks as well, aside from the private bank within the top 5, top 10 positions. So it's a good mix of banks, I would say, and it then comes down to opportunities or growth possibilities at a top level, and that would decide the allocation at a fund level. As I said, my fund has a good mix of PSU banks, private banks, and even non-banking players as well. PSU banks have had a good rally for the year so far. So to that extent, the valuation differential has narrowed, and now it comes down to selecting stocks on a case-by-case basis rather than looking at it as a group as a whole.
Some of the holdings which also are interesting, and I want your thoughts on, is the large aviation plays. Crude is on a lower side. There is massive flow on the growth in the sector, and now we understand some of the large players in the aviation space want to up their game in global arena. In fact, positioning themselves as a global airline, not only just a large domestic airline. So, do you think earnings could actually go into a next orbit? Up till now, earnings have been dominated by, the routes in the domestic business.
Okay. While I can't talk about stock-specific names here, stock-specific drivers here, but as you rightly pointed out, crude is a tailwind for the sector in general. Further, we've seen consolidation in that space within our own market, so that should also help these companies going forward. And route expansion or branch expansion should aid that even further. But having said that, as of now, within the fund, I have very, very little exposure to that space, and for multiple reasons, going from valuations to while growth is attractive, the sector also has rallied a fair bit. So I have very little exposure in that space within my fund itself.
Right. All right, Karthik, we'll let you go on that one. Thanks so much for joining us on this show today. That was Karthik Kumar of Axis Mutual Fund with the thoughts on the market and some of the areas which they are holding in their fund.